Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shruti Sharma and with me as always is Cheryl D'Souza. And viewers, this is a show where you get all your stock-related queries answered by the experts. So do get ready for that. But first of all, a very happy Gudi Padwa as well as happy Navratri to all our viewers. And Cheryl, seems like the markets are also celebrating that.
Absolutely, and you've rightly wished all of our viewers a very happy Gudi Padwa as well as Ugadi, and also Navratri is something I didn't know that it's a beginning of a phase.
First day of the
yes,
Navratri.
absolutely. So, hearty wishes to all of our viewers on that particular front. If you look at the markets today, subdued trading session coming in from markets. Remember, we had a good handover coming in from the US markets, but we've not been able to sustain those levels and perform as good as the US markets are. So right now, we are actually trading flat with a positive bias. Drifted from the day's highest point. It is Bajaj Twins that are ruling the charts when it comes to ruling the charts actually on the Nifty. Also, you have the life insurance companies. That is indeed BNS and Lens topic as well that we'll be talking in detail. What is exactly happening in the life insurance space companies. So you have HDFC Life, SBI Life also that are trending well. They are among the top gainers on the Nifty as we speak. Talking about the losing end then, it's BPCL, Coal India, Cipla as well as Axis Bank that are under pressure in today's trading session. Sectoral indices, if you look at that, you have Nifty Bank that is now actually just kissing distance from that negative territory as we speak, given up all of those morning gains. You have also the media index that is in the negative territory. The PSU Bank index on the flip side is actually holding on to gains of excess of about 1% or so right now, Shrishti. So if you look at the way how the market picture is, definitely we've drifted from those elevated levels. Right now we are nudging towards that flat mark for the benchmark indices.
Well, yes, absolutely, Cheryl. And markets have remained highly volatile over the past several sessions. But brokerages now believe that the risk reward in the market is looking better post the correction. What different brokerages are highlighting and what are some of the levels that they are watching out for the markets right now? Let me call in my colleague Pankaj Podar, who's joining us with all those analysis and highlights of the brokerage reports. Take it away, Pankaj.
Let's start with Citi first. What Surinder Goyal of Citi says is that post YTD correction, Nifty is down about 6% YTD and MSCI India has seen a decent amount of correction. What he's essentially trying to say is that valuations in India, which were on the higher side, is something which has seen a constant, number which has been above the 5-year mean average, and now the number is lower than the 5-year mean average or in line, and that makes it on the better side as far as the risk reward is concerned. So pointing out that for India, risk reward continues to be better versus EM versus DM. The premium has come down and come down quite substantially versus in the last few years. They continue to maintain their target as far as Nifty goes for December 2023. Let's start and look at Amish Shah as well from BofA Securities. And when we look at Amish Shah, he's been one who has lowered his range for the market, but says that a further 6-7% correction or in and around 16,000 levels for the Nifty, the market would become a buy on dip market. They believe that one should look to buy around the 16,000 level mark, and their analysis suggests that every time the US markets tends to go up or US markets tends to go down, the Indian economy contracts or rebounds lesser or better than them, and that's why Nifty tends to outperform S&P, and that's why it's time around 16,000 to go ahead and buy. And today morning, Vikash Kumar Jain of CLSA also wrote a note. They have a bullish-bearish sentiment indicator as far as their space is concerned, and their proprietary sentiment indicator says that India Bull Bear Index has hit a 91% bearish mark. This is ahead of the important Fed meet that is there, and that's why they believe that barring 2008, 2020, we have seen that such declines have been an opportunity to buy. 9 out of 10 times markets have rebounded and rebounded quite sharply. So once again, people are pointing out after the correction that valuations are now in line with averages. Yes, there is an earnings risk, but even factoring that, valuations versus emerging markets versus DM or with the historic average of India are either in line or the premium has reduced quite substantially.
Thank you so much for that, Pankaj, for putting into context what various brokerage houses have to say about investing in India. Definitely, it is a buy on dip markets, given the fact that we've seen a sharp correction come in in about this year itself. But let's talk about the insurance companies, and as promised on BNS and Lens, we will be talking about insurance stocks. If you look at among the top two or top 5 Nifty gainers, you have HDFC Life as well as SBI Life that's ruling the charts, and these are not the only counters. You need to take a look at what Max Financial is also doing in trade, and why are these stocks actually seeing a sharp up move in trade today? Because CLSA has gone ahead and upgraded the insurance pack. This is after they have corrected sharply post-budget. All the negatives have been priced in, looks like it, for CLSA when they talk about the insurance space. Let me bring on board my colleague Harsh to give us more details on that. And Harsh, why such a big thumbs up coming in from CLSA for the entire insurance pack? They've gone ahead and upgraded targets as well.
Well, yes, absolutely, Cheryl. Upgrades across the board, and that's a big positive for the insurance pack, and a much needed positive, right? Insurance has seen a lot of pain over the last couple of months at the very least. What CLSA continues to believe is that Indian insurers have corrected between 7 to 24% since the budget, and that correction means that negatives are largely priced in when it comes to not only the budget but even the general negatives. What they also believe is that current valuations only factor a 0 to 4% growth, and therefore therefore they are bullish on the insurance pack. They also believe that retail protection is returning to growth mode, and they believe that first half of FY24 ought to be tepid because we have seen good premium selling happening in February and March of 2023 on the back of those budget announcements. Further, they believe that changes in the LTCG structure could increase fair value for life insurers by 9 to 16%, and a 0 to 3% APE to VNB growth implied in the medium term is quite positive as well. In terms of the price target changes, they believe that they've upgraded SBI Life. They've increased their upside. They've upgraded to an outperform from a buy. 1325 is their target price on SBI Life. HDFC Life is 500 is their target price on that one. Max Financial 780 rupees, a solid upside there as well that they see 20% plus. And they have even maintained an outperform on ICICI Pru with a target price of 485, largely across the board positive by CLSA.
Yes, across the board, a positive by CLSA, and we are seeing all of these counters to be buzzing recently, and that's the upgrade coming in on 3 life insurance companies by CLSA, naming SBI Life, HDFC Life, as well as Max Financial, while it's a maintain on the ICICI Prudential. But let's move on and let's try to understand from our experts onto the show what's their outlook on the life insurance space. And for today, we are being joined by Kunal Bothra as well as G. Chokalingam is also on the show. A very good morning to both of you gentlemen. Mr. Chokalingam, firstly, let me come to you. What's your take on the life insurance space? How do you see all these companies and the stock prices going ahead? And which one is could be the best pick out of the lot and on the stocks that Harsh just highlighted that are coming out of the CLSA report?
Yeah. Happy Gudi Padwa to the ET team. Coming to insurance sector stocks, I firmly believe that the wealth creation is not, possible in insurance stocks. However, 15 to 20% upside is very much possible in the insurance stocks. Why I'm saying that major wealth may not be created for 3 reasons. The growth in the insurance business is struggling to keep up double digit, and also the competition intensity within the private sector multiplied after a lot of foreign players have come in through joint venture mode. However, there are 3-4 reasons which give you a lot of comfort in the short to medium term to enter insurance stocks, especially life insurance stocks. Firstly, as your colleague also mentioned, the stock prices have corrected. In fact, they have corrected 20 to 30% if we take a 52-week high. So normally I look at the 52-week high and then see how much it has fallen or gone up. So substantial fall has happened. Secondly, this sector still, it's a reliable growth sector. We have a lot of difficulties in many sectors. There are many sectors which are even degrowing due to the growth slowdown in India across the world. But insurance sector still a growing sector after the banking sector. Third, all of us know the penetration is still very low in the insurance business in India as compared to many comparable economies. Fourthly, the valuations also have corrected a lot. So today you are getting life insurance business 2 to 3 times price to embedded value. So which in my view is quite attractive. So considering these four factors, I would suggest two insurance play. The best one according to me is SDFC Life Insurance, and second one is ICICI Pru. These are the two fallen substantially and valuation wise attractive. I would normally stick to insurance play which has got a banking business as well, because I believe firmly that any insurance business which has got a banking business in-house can maintain the steady growth in the insurance by cross-selling. So we do not hold any insurance stocks personally.
All right, so that's the take coming in on the insurance space and what Mr. Chokalingam has to say on this one. Kunal, what's your view? Do you think the dynamics or the charts have changed for these companies going ahead? Will we see an uptrend in all of these beaten down insurance names?
Happy Padwa to all of you, as well as all the viewers of ET Now. My sense is that this last selling over the last 1 or 2 months for these insurance stocks, HDFC Life, SBI Life, etc., has now put in very near-term bounce for these for these sectors as well as the stocks. Now, the sense is that SBI Life was one of the stronger names over the last, I think, 6 to 8 months prior to the selling, which started off in the month of February. But then now the stock seems to be at a zone where it's bouncing off quite well. The indicators are a bit oversold. The stock seems to be getting into a bullish engulfing pattern on the weekly charts, which means that possibly in the next 1 to 2 weeks, you might see a follow-through uptick for SBI Life. But the broader structure for these insurance stocks is still on the negative side. So I would probably take this as a more of a trading play rather than any kind of a long-term investing, at least as of now, given the way the stocks have sold off in the last couple of months. And bounce could be maybe in the tune of 5% to 7% for the next 1 to 2 weeks.
All right, so that's the take coming in from Kunal as well on the insurance pack. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your, or rather, we'll start taking your queries. So don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, the show where we get you answers for all of your stock-related queries. You can connect to us. We are live on Twitter as well as Facebook, or you can write to us on the WhatsApp number that will flash on the top of your screen very shortly. Do mention your name every time you write a query to us. Mention the stock name that you're looking to invest in. If you've already invested, mention the buy price, the quantity, as well as the time horizon that you're looking to hold a particular counter. That will help our experts help you better. So let's get started with all the stock-related queries. But before that, Mr. Chokalingam, let me come to you and ask you, what should retail investors do in such a market scenario to make sure that their wealth is protected?
I mean, I personally know a lot of investors are really worried, but always expect this kind of fall. It happens once in 3-4 years, and it's an opportunity. Global pain is always India's gain. So to minimize the risk, what you need to do is that don't put all financial wealth in the equity. Restrict to maximum 50-60% of your financial wealth. Second, put minimum 50% in the top 250 stocks. They don't guarantee your capital, but certainly easy to exit, and they normally don't fall like small cap, which tend to fall even 30-40% in market like this. And second, don't use borrowed money, and be a medium to long-term investors. And whenever such fall happens, you keep adding more. And finally, in the small cap, mid cap, look at a promoter's background and the listing experience of those stocks and the balance sheet strength in terms of least leverage and least working capital crisis in terms of receivable and inventory and comfortable valuation. Let me tell you, if you follow these systematically in a disciplined manner, you are certain to create wealth. And 92, the market cap was around 2-3 lakh crore. Even after the fall, today it is 257 lakh crore. India would remain as a perennially wealth-creating long-term story in the equity business.
That's the advice coming in for all our retail investors. But let's get started with taking all your stock-related queries. And the first question that I have, Kunal, is coming from Mahendran, and he's looking for a view on Sun TV. He's looking for a fresh investment in this particular counter. So after so much of decline in the past 6 months, what will be your advice?
Well, I would suggest to avoid the stock as of now. It's been a downtrending stock last 5-6 months. Stock has corrected from 460 to now 430 levels. Consistent pattern of lower highs and lower lows for the stock price. Nothing exciting on the charts. Even the volumes have been a bit dismal for Sun TV over the last few months after this price correction. So that also indicates that the trader participation has dropped down significantly. Now, only on confirmation that the trend has reversed, when the stock makes a pattern of higher highs and higher lows, is where we would advise to buy Sun TV. As of now, I would believe that level is closer to 450 mark. So I would suggest a buy on Sun TV only once the stock breaks past about the 450 levels.
Okay, Kunal, he just clarified that he's not looking for a fresh investment. Rather, he's already holding and sitting at a loss of 12%. So what should he do now?
So you can hold on to it, but adding is not something which I would recommend. Only above 450 levels is what I would recommend to add.
All right, this next one, let me take this one from Bharatwaj. Bharatwaj, he's writing to us from Coimbatore. He has 120 shares of Marico at an average price of 521 rupees per share. He wants to know whether he should add some more at current market price. He's a long-term investor, Mr. Chokalingam.
Yes, Marico has corrected a lot. And also, as I've been saying, whenever the rate cycle is on the up cycle, FMCG remains very defensive. So he can hold and he can even average it by adding more.
Okay, moving on to the next question, and Kunal, this one is for you. This is from Anjali, and she's holding futures of ICICI Lombard from a price of 1130 rupees. That's the March future. She wants an advice. Is that a hold or exit at these levels?
Well, I would recommend to hold on as of now. The stock and the indicators are just about on the verge of breaking out on the upside. If that happens, that maybe you may expect a 5 to 7% rally. As I mentioned for SBI Life and such other names, that there could be a trading rally over the next couple of weeks. So you can participate on the upside, and I think maybe a 5% higher from current levels could probably make the stock break even. Make it come back to a break even level. So that's the zone where you can look to exit.
Okay, this one is coming in from Vivek, and this one is especially for you, Mr. Chokalingam. He wants to buy KPIT Tech afresh, excuse me, and he's checking if it's a good buy for a holding period of about 1 to 2 years. He's also saying that hope it's not run up too fast as well.
Rather prefer Gensa technology, and personally also we have invested to KPIT in terms of the valuation and also steep price corrections.
Okay, moving on to the next question, and Mr. Chokalingam, coming to you for the next one. The question is from Bharat, and he's looking to have the best value pick amongst the NBFC space. Some of the names that he has in mind is Poonawalla FinCorp as well as Bajaj Twins. Would you recommend any of these counters for a fresh investment?
Instead of talking about value investment in NBFC, the best is Sundaram Finance. Of course, Bajaj Finance also, but then the valuation comfort is not there. Sundaram Finance around a 3-time book value. It's a great value pick. For decades, it has created wealth for the shareholders. It will continue to create wealth for the shareholders. So I would strongly recommend Sundaram Finance.
There is a very short query that we have from Sandeep. Kunal, any intraday ideas today?
IDFC Limited is what you can look to buy. It's trading at 80 and a half levels. You can look out for buy closer to a target of 82.5 and stop loss at 79.8.
Okay, but with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back. Welcome back to Buy Now, Sell Now on Easy Now show, where you get all your stock-related queries answered by the experts, and continuing the same. And Kunal, coming to you for the next one. The question is from Jay Krishna, and he is holding shares of Maruti from a price of 8,492 rupees. He wants to know whether to shift to some other stock or hold on at this point in time. He wants an outlook for the medium term.
I would recommend to hold on to Maruti as of now, even though the stock is into a corrective phase. But my sense is that most of these large cap auto names are coming into a bottom formation zone. So since your buy price is not steep, I would suggest to hold on.
Okay, this one is coming from Tanay. He's writing to us from Vancouver, Canada, and he wants to know if it's best time to enter the insurance space. We did speak about this at length, Tanay, but given the fact that you've written to us from all the way from Canada, let me ask Mr. Chokalingam, what's your view, or if you could recap your view on the insurance space. He's also asking about HDFC Life as well as ICICI Prudential, which you like.
Between these two, HDFC Life is the best stock. To be very short and brief, the insurance sector would remain as a growth sector, and HDFC Bank will bank on HDFC Life will bank on HDFC Bank for cross-selling, and therefore he can consider HDFC Life for medium to long term also.
Okay, moving on to the next one, and Mr. Chokalingam, coming to you. The question is from Har Sandhu, and he's holding shares of BEML. He bought these counters before the demerger of 200 shares at a price of 1,871 rupees. He wants to know what to do next and what's the outlook on BEML Land Assets Limited. Your advice.
Yes, but according to me, 1800 price was pricing in the assets the company holds. So he can hold on to it. If he gets back his principal of 1800, he can sell the stock.
One more coming your way, Mr. Chokalingam. Looks like you are in heavy demand in today's episode. This one is from Hemant, and he's asked a query specifically to you. He wants to know about Jindal Poly Films. He is holding 20 shares at a price of 848 rupees per share. He wants a fundamental view for a period of 4 to 5 years. Also wants to know it's a good time to accumulate some more.
Somehow I am not comfortable with the balance sheet of Jindal Poly. If he is losing money, he can hold on, and because oil price fall is positive for the stock, and once he gets the principal, he can exit. If he is making profit, I would suggest sell on the stock.
Okay, Kunal, the next question is from one of your followers, that is Venkat Rao, and he wants your advice whether to purchase any of these names at current point in time. One name is PSP Projects and the other one is WPIL. Any of the counters that you're liking at this point in time?
So WPL is something which I don't track, so I'll skip commenting on that. PSP Projects, yes, you can look to buy at current levels of 669, 670. 10% correction already in the last 1.5 2 months from the 760 highs, and it seems to be that the stock is tapping into a support zone. So twice it's tapped back into a 660 support over the last 1 month, and it's managed to bounce back from those levels. So which means that the risk reward is favorable. That's a better stock to buy.
Okay, I hope this answers your query as well, Satyaveni, because you also asked about PSP projects. Let me ask the next query that's coming in from Siddharth, and he's writing to us from Bangalore. Also, wish you a happy Ugadi as well, Siddharth, but he wants a fundamental view on Prestige Estates as well as IIFL Finance for the longer term, and which one is the preferred pick, Mr. Chokalingam?
IIFL Finance, you can look at it for long term, but instead of Prestige Estates, I would suggest Oberoi Realty in terms of the valuation, diversified business model, and also the leveraging. And finally, the established track record of Oberoi is much better than the Prestige Estates.
Chokalingam, once again a question for you. Raman wants to know, is this a good time to enter into the auto ancillary company, Steel Strips Wheels? Your advice.
He can hold on to steel strips if he is losing money. If he is not holding steel strips, I would suggest LG Balakrishna Brothers, which is in single digit and doing extremely well. And second, Uniparts, its warehousing in the US is going to be a game changer. So these are the two auto component stocks he can consider.
Okay, this one is coming in from Indu, and she wants to know about Triveni Turbines. Kunal, what's the correct level to go ahead and accumulate this one?
Well, 300 is a good price to buy the stock. It's come back towards a YTD trendline support from Jan lows of 250 to 60 for Triveni Turbine. So after a decent rise, the stock has come back towards a major support, and that makes the trade a lot more attractive than what was earlier. So current levels is a good level to buy Triveni Turbine.
Okay, Mr. Chokalingam, let me take it up from you. Karthika is holding 75 shares of Infosys near about the current market price. He wants to know, given the Fed interest rates and the decision by the FOMC slated to be announced today, is that a hold or a sell at this point in time for Infosys?
Certainly hold, and don't have to worry about Fed on Indian IT stocks. The profile of Indian IT stock is different from technology stocks in the US. Here, they use the cash to reward the investor in terms of buyback and a good dividend. So that's not a concern at all. The concern is only the single digit growth in dollar term, but that is in the price. So therefore, the investor can continue to hold Infosys.
So it's coming from Venkataramana from Hyderabad. Kunal wants to know Birla Soft and Intellect Design can be bought at current price?
Well, Birlasoft, yes, I think the stock seems to be coming back towards a very good support territory. It's ending a time-wise correction more than a price-wise correction. So it looks attractive at current levels of 275. Third attempt, I think the last 5-6 months for the stock to try and retest these lower in the channel pattern. So looks attractive on the charts. You can look to buy. Intellect Design as well. I think the last week the volumes are very attractive. The stock has come back towards 410 levels. Again, a stock which has slowly and steadily got into a time-wise correction. So I think price-wise, a good level to buy Intellect Design as well as the first stock which you mentioned.
Okay, Mr. Chokalingam, Girish Iyer is actually holding shares of two counters. Firstly is IDFC Limited and the other one is IDFC First Bank. IDFC First Bank has already been answered by Kunal. So let me take up the next one. He's holding 12,000 shares of IDFC Limited at a price of 91 rupees and he's getting confused with so many news flows regarding the reverse merger that's going to be done. So what should he do now? Because on IDFC Limited, he's sitting at a loss.
If it improves further, you can sell it off because even after the merger, the equity base is very huge. And all the private banks which created wealth, they started with a relatively low equity base and less competition. But today the competition intensity has increased. Investor can sell and look at a bank like Bank of Maharashtra. It is the best PSU bank, and I consider this as a mini HDFC bank in making. So you can shift from IDFC to Bank of Maharashtra.
Okay, mini HDFC bank in the making is what you said for Bank of Maharashtra, Mr. Chokalingam?
Yes, firmly. If you look at the credit growth, if you look at the provision coverage, if you look at the CASA deposit ratio, if you look at the net NPA percentage or gross NPA percentage, or even profit growth, of course, in terms of quality, it is similar to mini HDFC bank, but don't expect the share price to go up to 3-4 digits. So, because it is always based on the valuation and parameters. So, in terms of those parameters, it is, according to me, it's like a mini HDFC bank in making. But definitely don't get carried away and expect a 3-digit return. But it can create a substantial wealth from the low base price of around 55 rupees.
All right, so that's the extensive take that's coming in on Bank of Maharashtra from Mr. Chokalingam. But Kunal, coming to you. Mr. Singh from Pune has written to us and he wants to know if he can buy Gravita India for a period of 2 to 3 years right now.
Well, Gravita India, you may look to buy. I think the correction seems to have completed 520 to 440 and from 440 the stock is now back towards 478, 480 levels. So a bounce back from the previous lows as well as a swing breakout. I think it's a good level to buy Gravita.
Okay, Mr. Chokalingam, Guru wants to know at this point in time, is Vardhman Textile is a good fundamental bet as per you?
Great stock for long term, but in the short term, it will have problem. Even Jan-March results will be quite bad for textile companies. I would suggest wait for Jan-March results and then consider buying it for long.
Okay, this one is from Sunil. He's writing to us from Muscat and Mr. Chokalingam. He's actually thanking us for having you on the show today. But he wants 3 picks for investment currently. Which of these, which stocks do you think stands out for a period of investment for the long term?
Yeah, I would suggest, combination of both large cap and mid cap. One is Reliance Industry. And in small caps, you can look at Uniparts Limited and Gensac Technologies in the small cap space. These are the 3 stocks I believe can create a substantial wealth in the medium to long term.
Kunal, coming to you for next one. Ravi wants to know the short-term targets on RAC. Ravi is already holding the shares at a price of 120 rupees.
So 125 could be a short-term target. That's where the stock has been taking resistance twice. So 125, say plus or minus 1% for the stock price should be a trading range or a target range for RAC Limited.
Okay, the next one is coming in from Nalini Jindal and she wants to know about Biocon, Mr. Chokalingam, for a period of 3 years. Can she look to buy this one right now?
I've been giving Cell Call and Biocon from 330. I would continue to suggest avoid. It's a great company, great management, but there are 2 major problems. The biosimilar prices are crashing. The insulin product realization is also crashing. Just few days back, all global peers have announced massive cut in the insulin product prices. On top of it, they've gone for a massive acquisition of biosimilar business when the realization is going down in biosimilar segment and also when the rupee is falling. And just before rupee fell 8%, they committed $2 billion for acquiring a biosimilar company through debt. So all these are negatives. I would not be surprised if Jan-March quarter also the company posts big losses. So at least till March results, you avoid Biocon.
Okay, one more pharma name on the list, and after a long time I'm seeing this name actually. It's Loris Lab, but almost the same story where Samrat is sitting at a loss of 33% in this particular counter. Mr. Chokalingam, what should he do next? Is that a hold or sell?
33% is a big loss and need not book loss in this counter. It's a great management, great balance sheet. But of course, pharma export is not growing, realizations are under pressure. But I am sure that the stock would improve significantly from current level. So therefore, you can hold it for another at least 6 months to 18 months.
Okay, let me try and give Mr. Chokalingam a break actually, and but doesn't look like it because only I can see only queries directed to you. But let me take this one. It's coming from SD from Bangalore. Is it is it wise to buy TCS at current rate, and how can it be compared with HCL Tech on the charts, Kunal?
Well, I would suggest to wait out for 3180 on TCS if you're looking to buy, because the stock is still going into a downward trend. Short term, hourly charts, as well as on the daily time frame, the stock has been just making new lows for itself. Even in the last 4 or 5 days, for example, the stock has been making a pattern of lower highs consecutively. So there has to be a point where the stock breaks past above the previous day high. That's going to be a point where you may look to buy. So maybe that zone is around 3180 mark. Would suggest to buy only about those levels.
Okay, Mr. Chokalingam, you did touch upon HDFC, so the next query is on this one. Pankaj is holding shares 150 quantity at a price of 1130 rupees, and he wants to keep this for the next 5 years. Should he keep HDFC Bank for the next 5 years, or rather the next HDFC in the making that you just highlighted would be the other bet that he should be looking at?
He should hold on to HDFC Bank for next 5 years because the banking industry now again come back to 15% credit growth, which is a record high, and HDFC Bank is going to be a 18% growth story at least for another 3 to 5 years in terms of profit growth year on year. Is a best stock in the large cap space to hold for long term.
Okay, this one is coming in from Jitin. He's asking about Jubilant Pharma, 129 shares. He bought it at around 584 rupees per share. Kunal, he's suffering a heavy loss. What should he do? Should he look to average?
Well, yeah, I think you can look to average at current levels of 294. The last, I think, a day when the stock moved up from 275 to 320, that was a day when the stock had jumped up extremely high. Volumes were also quite strong on that day. And post that, it's going through a 3-day correction, and that correction has been absorbed about the 270 level so far. So seems to be a better chart in terms of recovery, a potential recovery, would suggest a buy on average.
Okay, so that's the advice coming in. But with this, viewers, it's once again slip into a short break. But don't go anywhere. We'll be right back and taking more of your stock-related queries. So stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. The next query that I have is coming in from Akhil. He's bought 200 shares of Emphasis at a price of 1900 rupees per share. Kunal, what's your view on this one?
Well, Emphasis and most of these other mid-cap IT names, they've corrected very sharply in the last 1 month. I think Emphasis also, I think from 2200 has corrected back towards 1800 levels. So price-wise, it's made a new swing low. But just because of the way the stock has corrected from the 2021 highs, I believe it's come back towards a very attractive territory. 50% high low from the 2021 highs makes the trade a lot more attractive. So a good price zone to buy the stock if you're a long-term investor.
Okay, Mr. Chokalingam, coming to you for the next one. Bishakha is holding 10 shares of India Mart from a price of 3,900 rupees, sitting at a decent profits. Wants to know, is this a good time to book profits or rather continue holding? Investment horizon is for the next 3 to 5 years.
I would suggest booking profit at current level, India Mart.
Okay, Kunal, this one is from Swati, and she has 4 counters that she's mentioned, and she's suffering over 20% loss in each of them. That is RBL, Reddington, Hindalco, as well as GICRE. Out of these 4, which 2 of them should she look to exit, or should she hold all 4 of them?
So GICRE as well as RBL Bank are the 2 names which you can look to exit, because the way these stocks have sold off, it's going to take a lot of time for these stocks to get into recovery. There is bound to be a time-wise correction. But the other 2 names which you mentioned, for example, Reddington, etc., these stocks are looking attractive on the charts. Reddington is still holding above its 200 DMA, and I think it's been one of the few mid-cap IT names which has done very strong in terms of the price performance in the last 2 years. So that's a stock which I would look to hold.
Okay, Kunal, one more question for you. There's a short-term trader holding SRF from a price of 2,260 rupees, sitting at a good profits. So is this a good time to book profits, or you expect the uptrend to continue?
So I would expect the uptrend to continue. Last 2 days, the stock has gained from 2,300 to now I think 2,375. The last I had seen. So looks attractive on the charts. Would recommend a hold. What you can do is you can keep today's low as a stop loss and continue to ride this trend on the upside for SRF.
Okay, Mr. Shukalingam, this one is for you. This one is from Akshay. He's writing to us from Dubai. And on the occasion of Gudi Padwa, he wants to buy one stock and he's giving 3 stocks. Out of these 3, which one should he look to buy for the longer term? One is TCS, Sula Vineyards, as well as MTAR. MTAR Tech.
Okay. In case Sula corrects, today it has gone up 8%. In case it corrects even 3-4%, he can buy Sula Vineyard. Otherwise, he can buy TCS.
Okay, Mr. Chokalingam, one more question for you. Akhil is holding 70 shares of M&M at a price of 1,327 rupees. The stock also has a news flow where they are making a new company for their last mobility division. But since he's at a loss, so is that a sell or hold?
He can hold. I'm sure he will recover his capital back in M&M.
Okay, this one is coming from Pooja and she wants to know about Bajaj Finserv, has about 10 shares at a price of around 1,350 rupees per share. Wants to know what sort of a growth prospect will this one have. Makes sense to stay put with this one, Mr. Chokalingam?
Not losing money and move to stocks like HDFC Bank or Sundaram Finance.
Okay, Mr. Chokalingam, Krish wants to know, can RHI Magnesita can be added at current levels?
One can wait for March results because steel industry is still, in terms of profitability suffering, and refractory is major supply to steel industry. I believe Jan-March results also will be a little bad. So one can wait for March results.
All right, with that, let's kickstart with the real rapid fire then. Mr. Chokalingam, I hope you're ready. But Kunal, this one is for you, coming in from Ramesh. He's writing to us from Bengaluru. 1,000 shares of Som Distilleries at 140 rupees per share. Should he continue to hold?
Would recommend a hold.
Okay, Kunal, Pawan bought 500 shares of Wipro at an average price of 575. Hold or sell?
Switch to Tech Mahindra.
Okay, Mr. Chokalingam, this one is from our viewer who's holding ONGC, Titan, Escorts, as well as Tata Steel and Tata Motors. Makes sense to stay put with all of them?
No, only 2, Titan and Escorts, one can hold.
Mr. Chokalingam, Hamsa is holding 70 shares of Dabur from a price of 546. Can she buy more at current market price? Investment horizon is for the next 5 to 10 years.
Certainly, yes. One can average it down.
Okay, Yogesh wants to know about Cummins India, 100 shares at a price of 1,420 rupees per share. Kunal, what should he do?
You can continue to hold on.
Kunal, YV Lakshman is holding Happiest Minds from a price of 840. Can he add more at current market price?
Not recommending an add.
Okay, Mr. Chokalingam, this one is from Jitendra from Pune. He's a long-term investor. Praj Industries, 100 shares at an average price of around 318 rupees per share. Wants to know for additional investment, which other sugar stock should he look at?
I would suggest avoid sugar stock, only Praj he might average it down.
Okay, Mr. Chokalingam, Suresh wants to know, is this the right time to buy Apollo Hospitals?
Yes, for conservative long-term investor, at this price, Apollo Hospital is a good stock.
Okay, this one is from Kanan Rajni. Wants to know about Britannia. Is it a good bet to stay put given the fact that we are seeing a food inflation, a rise in the inflation levels? What's your take, Mr. Chokalingam?
Definitely one can buy, and there is a news of higher wheat crop area, which will be positive for Britannia.
Okay, Mr. Chokalingam, Deepak is holding 160 shares of Renuka Sugar at an average price of 45. Is that a hold or sell?
Sell.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Mr. Chokalingam, as well as Kunal, for joining us on the show, giving your take on the insurance pack, as well as resolving all of our viewer queries. And viewers, with that, we come to the end of this edition of Buy Now, Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. But stay tuned. Coming up next is Markets at Noon with Anisha and Pankaj.